Texas Instruments is a pretty cool company. I just think they're your biggest play on analog chips. So there are a lot of companies that have a hand in analog chip design, production, manufacturing, different types of analog chips. Texas Instruments is your biggest one. So they are the world's largest analog chip maker, and that means they have huge scale advantages, like a huge global sales staff, for example. So their chips go into cars, industrial equipment, microcontrollers, personal electronics, your thermostat at home, your electric toothbrush, a plane, a satellite. Their analog chips are probably in more things than you can imagine. And if someone doesn't know what an analog chip does, an analog chip basically just converts a signal from the world, like sound or temperature, into a digital signal. Okay. Now, they're also in IoT devices, which is kind of an up and coming segment, Internet of Things devices. So IoT is it can be anything now. We talked about thermostats. So your thermostat can be connected to the internet, and that's Internet of Things, but it can be in other things too, like your speaker and different things. So, it's important to understand, and I think you're going to be bearish, but I think it's important that people understand that this is a cyclical industry, highly cyclical. And it looks like we're seeing 2-year cycles. So 2021, 2022 were the recovery cycle from COVID. 2023, 2024 are the down cycle, okay? And they're expecting 2025, 2026 will be the upswing, the re-up cycle. So it's important that people understand that stocks for these companies are going to go down and up along with these cycles. It happens to be a 2-year cycle right now. So the stock, well, Texas Instruments is a bit of an exception. I'll get more into that, but Texas Instruments has performed pretty well this year, actually. Maybe people are predicting that upswing next year. But yeah, so sales are down. We're down 8% year over year. And other companies are down way more. Last episode, we talked about on semi, which is down 19, revenue is down 19% year over year. So the 18% year over year decline for Texas Instruments looks like nothing compared to the year over year revenue decline in some other companies.
Yeah. So explain the difference in regards to chips and GPU. We've seen a difference in regards to the chip sector and GPU sector. So go ahead, and you mentioned this in your last podcast with On. So explain that.
Probably what you caught in the last podcast was I described the difference as a difference between analog chips and computing chips. So a computing chip could be a CPU or a GPU, but it's a smart digital chip. It's not a dumb analog chip. You just think about your electric toothbrush or your thermostat. Those don't have the kind of computer chip that's going to run a video game, or the kind of computer chip that's going to run AI inference, obviously. They're just dumb chips that are taking signals from the world, like sound or temperature, converting that into some kind of digital signal. But they're necessary chips. They're very important chips. And according to Morningstar, there's actually quite a bit of a moat here. So there are very few excellent engineers in analog chips. So if a company has the best engineers, that's hard to replace. Also, apparently companies that buy these chips don't want to switch manufacturers. And that's another part of the moat here. So if you're, for example, relying on a Texas Instrument chip to make your satellite, you don't want to endanger the performance of the satellite based off of a cheap chip like that. You don't want to pay a few cents less for someone else's analog chip and then endanger the performance of that satellite. So you want consistent performance, so you stick with a consistent manufacturer. So people stick with Texas Instruments.
So we've seen such an increase in revenue for GPUs because of AI build out, and the chip sector has not benefited from that sort of revenue increase the way that the GPUs have. So let's separate those two in different. And we have some companies that cross that bridge too. For example, a company like ASML does a lithography machine that sells those for both chips and GPUs, the same chips that go in the GPUs for AI, right? But we have not seen, basically, we're in basically a revenue decline for the chip sector in general. We've seen some companies do well, like TSM and for example, because they do the chips for the GPUs that are required for AI, versus a company like TXN does not do those same chips. So that, I just wanted to clarify. So would you say that that's correct? I'm trying to just summarize what you're saying.
Yeah, and the question really is, why are we talking about Texas Instruments? Does it have any exposure to AI? We mostly focus on AI stocks. And the answer is yes, it does, because Texas Instruments chips go into microcontrollers, which we talked about being an industrial product. So for any kind of industry, factory, data center, you're going to have microcontrollers in there. So TXN chips go into the microcontrollers. Also, they're expanding their manufacturing of gallium nitride semiconductors, which are very important for high performance in AI. So they do have a play into AI. I didn't hear AI mentioned at all in the earnings call, which is kind of crazy. It's just not the huge portion of their market, but it is a chip maker, and they're going to benefit from more microcontrollers and things like that. And then one other thing I wanted to mention, EVs. So they're really big into auto. I want to say 20-25% of their overall revenue is from auto. And unfortunately, they're pretty well exposed to China, but that's actually been a good thing because Chinese EVs have been skyrocketing. The US and European market is still in a downturn compared to previous revenue growth, but Chinese EVs have been skyrocketing, and they provide a lot of chips to Chinese EVs. So they've actually had growth from EVs when Europe and US have had declining revenue growth in EVs.
Yeah. Well, great take there. One of the things I'd like to highlight just in general is, so we've seen some of the chip sector equities been hurt by over the last 6 months. I mean, we really saw a good run until the last 6 months, and you and I debated this previously. But there's been some of the chip sector that's been pretty down just in general, except for the build out phase of AI. So it sounds like what I'm hearing though is that even with the build out phase of AI, what you're saying is that a company like TXN will still benefit because their chips are used in the AI build out as well. They're maybe just not the main player. They're maybe not the main GPU or the main chip that's utilized, but they're still going to be required for build out phase AI, coupled with the fact that there's these cycles that the chip makers will build that will benefit from, and that could be coming in the next 2 to 3 years.
The CEO, I hear him on the conference call, and he's saying, like we're waiting, we're waiting, we're waiting. I've kind of been hearing that for months now, quarters now. We're waiting, we're waiting, we're waiting for this recovery in analog chips. Even in computing chips that are CPUs, we're waiting, we're waiting, we're waiting. I think so much spin has been focused on GPUs and AI and how to position for that, and data centers and building data centers. There just hasn't been as much focus, but that has to catch up at some point. Like companies need these chips at some point. So what I will say is Morningstar is expecting snapback growth for Texas Instruments to be 14.5% year over year in 2025 and 19% in 2026. So we know that revenue is down 8% this year, year over year, but they're expecting 2025 to be 15%, 2026, 19%. So you should see a rally in the shares.
I think you're giving an average there. Is that already baked into the stock? Is that already cooked into the stock price, though? I mean, TXN, just let me give a little background. So the one thing I like about TSN is the 2% dividend. They do stock buybacks, but it reached recently an all-time high of $220 a share. And so I really liked TXN at a price target. I mentioned this to you. I don't know if you remember. We talked about it at around $140 to $150 a share. I really liked TSN. I like to come up with my price target for a stock and a plan or a trade before I go into it. And at $140, $150 a share, my price target for TXN was around $190 to $200. So I saw approximately, if you have 100 shares, that's about a $5,000 return on an investment with about a $15,000 investment. So I like that. I like those bread and butter numbers. I like the fact that you can buy a company that sells a product that's going to be around in 5 years, even if it goes from $140, $150 a share to $130 a share. I still maintain my price target of around $190 to $200. However, TXN is currently trading at what, 20, right around 204, 206. So it's already reached my price target. So you mentioned 8% average. I think it's an average because in 2024, the revenue decrease was 13%. And in 2023, revenue decreased 12% from really what we saw was the rebound in 2021 and 2022. You've also seen an EBITDA decline of 20%. So it's trading at near all-time highs. Its P to E ratio is almost 40, 38. It's never traded with a P to E ratio of 38. So I just right now, I think some of the Morningstar analysis is already cooked into the stock. I like TXN as a company, but I just wanted to see what your thoughts are and sort of you're kind of giving a little bit of a bullish take. I'm giving a little bit of a bearish take. We kind of do that back and forth sometimes, but go ahead and talk about that. Yeah.
TXN is so tricky because you're right that some of this recovery is already baked into the stock, whereas other companies like onsemi, it's not baked into the stock yet. So, and to go back to our last discussion, the reason is extremely clear here. Okay, the reason is when you compare apples to apples, when you compare TXN to onsemi and other similar analog chip companies, TXN has had less revenue decline. So their year-over-year revenue growth has been a little bit less of a negative number than other companies like ON and also NXP. You've got, significant negative growth in some of these other companies, whereas Texas Instruments you don't have as bad. So they're going to have a higher stock price and they're going to have a higher PE. When revenue growth is better and margins are better, you're going to have a higher stock price and a higher PE. So Texas Instruments is probably your most pure play. Also, the dividend is going to play into the valuation. They have close to a 2% dividend, whereas onsemi has zero dividend. Some of these other companies have 0% dividend. So all those things get baked into the PE. So you get what you pay for. When you look at valuation, you truly do get what you pay for. And this is a little bit more expensive than, let's say, onsemi, and NXP is close to a 10 PE ratio also. So why are you paying a higher multiple? It's because you're getting more for your money.
Well, I mean, my price target for 2025 is around $210 a share. And so I really liked TXN at $140, $150 a share. I'm not sure I like it currently. So I like to look into that. Now, the one thing I will also say, just for our listeners out there, I want to put a little tidbit out there, is James and I don't move stock price. Okay. Average retail traders and money do not move stock price. It's institutions, which is basically 90% of the stock is held for TXN by institutions. They move stock price. So when you see institutional buying or selling, that's what's going to really move the stock up and down. And so I just wonder, just in general, a critique, if the institutions kind of had that run in regards to 2025 already, if 2025 numbers have already been, I'll say that again, cooked in. So I'm a holder of TXN. If you have a position at the $140, $150 a share, I am not a current buyer, but I'm a holder. And the one thing I will say is, and this is why I bring up institutions, is that just coupled with all these, my price target with TXN, I do like the chart on TXN. So you saw basically a peak, you've seen it form sort of the right side of a base, and it's kind of digesting and forming a little bit of a handle, which points to, that's a bullish chart, which to me points to the stock going ahead and going past its previous high. So maybe it's going to do that, but the institutions are going to have to move the stock, in my opinion. Let me just bring up some numbers. 21-day moving average is 206. It's 50-day moving average 204. It's 200-day moving average 190, and it's really formed basically at a support at the 21 weekly average. And so right now it's digesting. I like the technical analysis, but my price target, I mean, again, is 190 to 200, and the average high analyst price target for 2025 is 208. Let me say that again. The average high price target for 2025 per analyst is 208. So that you have to take into account.
All right. So we'll do our takes. You'll do yours, I'll do mine, and then we'll have ChatGPT do a take. So what we need from you in order for this to work long term, you can only have two positions. No, hear me out. In order for this to work long term, I need you to take one of two positions, either bullish or bearish. Okay, so if you're not buying, don't say bullish, just say bearish, because you're not buying for a reason. You're not buying because you're worried it could go down, so that means you're bearish really. So we're not going to do hold or neutral anymore. We're only going to do bullish or bearish. So give me 10 seconds and just tell me if you're bullish or bearish, and then give me one or two quick reasons.
Well, I think we can also, the hard part about that is I know that's one of the things that you want to decide for your
Do
trader.
you own the stock? If you're neutral, then if you're holding, you should really own the stock and not be buying or selling. Do you really own the stock?
I own a small position in TXN as part of some of my dividend stocks. I do like the 2% dividend, but I've held it since around $140 a share to $135 a share. I also think though, like you would agree, would you agree that when you're trying to pick a trade, sometimes you pick a trade, you need to make a bearish a bearish call, a bullish call, and also a sideways call, because there's a lot of trades that you can put for sideways calls. And so I'll pick one of those two if that's what you'd like me to do. But I actually like a sideways call too.
Well, I don't want to. So there's a difference between buying and selling and being bearish and bullish. So buying, selling, and holding are different things than bearish, bullish, and neutral. So you can be holding, but that means you're not bullish enough to buy more. So just for the sake of our spreadsheet, I have to choose one or the other, bearish or bullish. If you say you're holding or you're neutral, I'm going to put that as bearish. So it's going to get logged as bearish anyways. So, but yeah.
You're going to, all right. So, for full disclosure for our listeners out there, I do hold a position in TXN, but I'm going to give you my 10 seconds. I'm bearish on TXN because I don't like, let me say, okay, so how can I say this most concise way I can? I'm bearish on TXN because I'd rather deploy money elsewhere currently.
Yeah, this is such a tough one for me to even. It's such a tough one. I hate to do it, but I think I'm going to go bullish. Okay, so I am bullish on Texas Instruments because it is the most pure analog chip play. They've got great Chinese EV coverage, and we're coming up from the bottom. But let's actually hear. I think it'll be fun to hear what ChatGPT thinks about it. So in order for me to do that, I have to pretty much, what I did was I just recorded everything we said about Texas Instruments, and I'm going to go ahead and, so on your iPhone now, it automatically makes a transcript of anything that you record in a voice memo. So I recorded a transcript, and now I'm putting it into ChatGPT right now. So ChatGPT is going to pretty much say buy or sell just based on what we said about Texas Instruments over the last like 10 minutes talking about it. Okay. How does that sound?
Let's hear what it has to say.
I'm bullish on Texas Instruments because their strong R&D drives innovation, and their focus on long-lived products ensures stable revenue streams.
So that's cool because we didn't talk about R&D. Yeah. We did talk about stable revenue streams, but we didn't talk much about R&D. But let me just ask ChatGPT, like, why? Can you just expand upon that a little bit? We like your 10-second take. Give us a little bit of expansion on that.
I am bullish on Texas Instruments because its substantial investment in research and development drives ongoing innovation, allowing it to stay ahead in the analog chip market. This dedication results in advanced products that cater to emerging technological demands. Moreover, the company's focus on long-lived products, components with extended life cycles used in sectors like automotive and industrial applications, ensures stable and predictable revenue streams. Customers depend on these enduring products, reducing the need for frequent replacements and fostering long-term relationships. These strategies collectively position Texas Instruments for sustained growth and profitability, making it a compelling choice for investors seeking stable returns.
And what's funny that she mentions is, so actually Texas Instruments specializes in chips that are going to be in a product that's going to last at least 10 years. So they have a little bit of exposure to like phones and tablets, but their specialty is products that are going to be used for much longer, like at least 10 years or closer to 10 years rather than like a smartphone that's going to be used for a few years. So dude, I'm telling you, she is dead on. You got to be careful going against her. She's saying buy, you're saying neutral or sell, you're saying bearish. So you got to be careful going against her. We're going to see over time how she stacks up.